Today, I'm telling you exactly what stocks I'm buying on this historic 2020 stock market dip. If you've been watching a lot of these stocks I'm buying in 2020 videos, first of all, good job, way to educate yourself. Second of all, you've probably been hearing a lot of these same stocks over and over again. Buy airlines, buy Tesla, buy cruise lines, buy more Tesla, blah 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 blah. Are a lot of these stocks on my watch list too? Heck yeah, who wouldn't want to watch these stocks? But if you're like me, you want to hear about some new stocks. In this video, I'm going in depth on 5 stocks that I think are unique to my watch list. In fact, I'll bet that you've never even heard of a couple of these stocks before. And at the end, I'm going to show you guys my entire watch list, all 45 or something stocks that I'm watching during this recession. So make sure you watch this whole video because you don't want to miss out on my analysis of these 5 fresh picks and my entire watch list at the end of the video. Disclaimer! Alright, so here's the first stock, ticker symbol PLAS. I believe it stands for please like and subscribe.
Got him!
Seriously though, hit that thumbs up, subscribe, and we'll get right into this video. Got it? Good. First ticker symbol, FSLR. This company, First Solar, manufactures solar panels and provides services to solar power plants like financing, construction, maintenance, etc. I really like their industry, their product, their balance sheet, and their current valuation. Renewable energy is obviously where the world is headed, so I won't go too in depth on that. But First Solar certainly has a foothold in this industry that still has a lot of room to run. Despite being founded all the way back in 1999, they continue to innovate. Their latest product, the 6 Series solar panel, is killing it. First Solar claims that their cadmium telluride Series 6 solar panel produces more energy than a crystalline silicon solar panel. What the heck does this mean and why does it matter? Well, after a crash course on photovoltaic energy conversion, all you need to know is that prior to the Series 6 solar panel, First Solar's products were cheaper but much less efficient than the competing silicon solar panels. However, now the Series 6 panel is cheaper and more efficient than the competition. That's probably why their Series 6 model is largely sold out through the second quarter of 2021. But still, possibly one of the biggest pros of this stock is its balance sheet. First Solar has over $1.8 billion in net cash. That is a ton. And on top of that, they've been able to consistently average about $500 million per year in operating cash flow for the past decade. That leads me to my final point. It's undervalued. The current market cap of this stock, aka its valuation based on the stock price, is about $4.2 billion. They have $1.8 billion in cash. That means if $1.8 billion of the valuation is credited to the $1.8 billion in cash that First Solar already has on hand, then the remaining $2.4 billion of the valuation is a valuation on the operations of this company. A company which generated over $1.4 billion in revenue in 2019's fourth quarter alone. All of what I've just said makes this stock seem a little cheap to me, so I'm going to be buying some First Solar very soon. The second stock I'm really excited to buy, ticker symbol DLR, Digital Realty Trust. Digital Realty Trust is in the business of owning, acquiring, and managing technology-related real estate, like data centers. DLR is a REIT dividend stock. REIT stands for Real Estate Investment Trust, or simply a real estate stock. These are a great way to invest in real estate indirectly and with small amounts of money. At the most basic level, a dividend stock is a stock that pays you for owning the stock. For example, if you own 1 share of DLR, and DLR's dividend yield rate is 2.9%, which it actually is, then DLR will pay you approximately 2.9% of that share's value every year. Digital Realty Trust is one of the better REITs right now, in my opinion, because with this whole quarantine situation, everyone is online all day, all the time. With stress on the internet and servers, I don't even know if the internet can get stressed, but you know what I mean. What kind of real estate would suddenly get very valuable? Technology-related real estate, like data centers. DLR has a pretty smooth and consistent all-time chart, which reflects a solid company with repetitive growth. As a real estate stock, it's inherently quite safe. It recently had a run-up, and it's currently sitting at about $148 per share, which feels a little bit pricey, but it's definitely something I want to own during this unique recession.
Hey guys, it's Matthew here from behind the screen. I was just editing this video and I said it was about 148, but as of today, it actually dropped down to 140, so that is good news for us. Keep watching.
Stock number 3. Possibly one of my favorite stocks right now, maybe of all time. We will see how much money it makes me. The Trade Desk, ticker symbol TTD. If you know me personally, you've definitely heard me talk about this one before. It's a programmatic advertising platform that helps advertisers get the right ads in front of the right people at the right time. Do you ever wonder why some ads seem so personalized to you? Well, I'm willing to bet that TTD had a part in putting that ad there. Now, this is a growth stock, so it's a little more exciting and it has a lot of catalysts going for it right now. For example, number 1, CEO Jeff Green said that a lot of the companies who were caught behind the digital ad wave are now doubling down with TTD on the ads that they know are making a difference. Number 2, as streaming platforms continue to emerge and grow, TTD gains more revenue. That's because streaming services like Hulu display personalized ads. Your email, along with all of your personalized information, is attached to your Hulu login. Connect the dots and you'll realize that streaming platforms are a great way for personalized ad companies like TTD to make money. Third, TTD is expanding in Europe and Asia, but that's a whole nother rabbit hole, and for now, we'll just say it's promising. In the last 4 years alone, TTD's revenue grew 481% to $661 million. It's been profitable since 2013, and the CEO, Jeff Green, has a great track record. He actually founded the first online advertising exchange and sold it to Microsoft. And he also has significant personal stake in TTD, as he owns about $850 million worth of TTD stock. So obviously, he's very inclined to help the company succeed. Despite $3.1 billion being spent on their advertising platform last year, TTD has captured less than 1% of the global ad spending market, which is valued at $725 billion. That leaves a lot of runway for a growing company like the Trade Desk. As of now, it's still a little expensive for me, trading at over 80 times earnings. I'm going to wait for this one to cool down a little bit, and I'll definitely be getting into this position soon. Okay, number 4, Wells Fargo, ticker symbol WFC. Wells Fargo is a bank and it's a dividend stock. Banks have been performing very poorly recently because the Fed has reduced interest rates to nearly zero. Essentially, the Federal Reserve is trying to make it easier to infuse money into the economy to kind of prop it up in this tough time. But as a side effect, a lot of banks are not generating as much revenue as they usually would from their loans, which is often a bulk of where their revenue comes from. On top of that, the Fed also placed a limit or a cap on Wells Fargo's assets after their fraudulent accounts scandal. So right now, things are not looking too hot for Wells Fargo. But because Wells Fargo is one of the leading small business lenders, the Fed temporarily lifted this asset cap on Wells Fargo's assets so that they could relieve some of the stress that small businesses are feeling during this pandemic. Could this be an opportunity to capitalize on Wells Fargo's newly raised asset cap? Maybe not. But Wells Fargo has loaned more money to small businesses than any other bank between 2002 and 2017. So this bank is not going anywhere. This stock's really on here because of its value. As of April 6th, Wells Fargo was trading at a 35% discount from its book value. If you don't know what that means, it's really cheap. Additionally, Wells Fargo has a 6.74% dividend yield. That's pretty dang good. Do I think Wells Fargo is going to have some crazy 500% meteoric rise in stock price? No. But I think it's a very safe dividend stock that's very undervalued right now and still has a lot of potential upside, and it provides diversity and more safety to your portfolio. I'll be buying a lot of this one soon. Number 5, I would actually consider this stock somewhat of a life hack. If you don't know what the S&P 500 is, it's an index fund that tracks the US stock market. We quote unquote judge the stock market performance off of the S&P 500 index most of the time. There are ETFs like SPY, a lot of different letters, but follow me here. SPY mimics the price movement of the S&P 500. So by investing in SPY, since you can't invest directly in the S&P 500, you're sort of investing in the US stock market as a whole. This is a great place to park your money. But with an average return of 7% per year, Investing in SPY is not the most glamorous. Introducing SPXL. SPXL is another ETF that also mimics the S&P 500 and SPY, but at triple the price movement. Meaning, if SPY goes up 7% over the year, SPXL has gone up 21% over the year. Moreover, as of today, SPXL is at a current stock price of about $32 per share, whereas SPY is about $274 per share, meaning you can start investing in the S&P 500 at a lower cost with higher potential return. But what goes up must come down. In other words, if SPY drops 7%, your investment in XPL will drop about 21%. The reason why I think it's a good buy now is because once we find a bottom for this recession, you've got to trust that the American economy will recover. One of Warren Buffett's most famous mottos is never bet against America. Alright guys, so those are the 5 stocks I wanted to get through today, and I want to note that those 5 stocks are not necessarily the best 5 from my watch list, they're just more unique to my watch list, I believe. I wanted to give you guys some stocks that maybe you hadn't heard of or seen on other channels or in the news, some new stocks to look into during this time. If you enjoyed my analysis of these 5 stocks and I earned your like, please feel free to hit that like button and subscribe. But now, here's the rest of my watch list. We've got growth stocks, risky stocks, blue chips, which are established companies with long track records like Apple and Google and those guys, dividends, and indexes. So for each section, I'll give you guys a little highlight. Aside from TTD, I think Tesla actually does have a lot of long-term potential. In the riskier plays, I think Virgin Galactic, ticker symbol SPCE, is one of the highest risk but highest reward stocks. Of the blue chips, I'm always a fan of Visa and MasterCard, but AMT is a great stock that's going to play a big role in the future of 5G, so definitely look into that. For dividends, I think Waste Management, ticker symbol WM, is always a great stock to have. I believe it to be recession-proof and it has a great dividend. As far as indexes go, we talked about SPY, we talked about XPL, but VB tracks small cap stocks. So essentially, it tracks the smaller companies that will probably get unproportionately clobbered during this recession, but might also have a big unproportional comeback. Thank you guys so much for watching. If I earned your thumbs up today, feel free to hit that like button, subscribe, and turn on those notifications. Comment down below. I want to hear what stocks you guys are looking at right now. If you want my opinion on any of them, just let me know. You guys are teaching me just as much as I'm trying to teach you. As always, we end with the quote of the day. Value stocks are about as exciting as watching grass grow. But have you ever noticed how much your grass grows in a week? With this whole quarantine thing, I have definitely seen my grass grow a lot. I can say that better. We haven't really mowed our lawn lately with this whole quarantine situation, so I actually kind of relate to this quote. Our grass is getting like super long. But in all seriousness, I hope this quote is able to give you something to think about. And with that, I'll see you guys in the next one. Peace.